So for this week's market news, which is the 17th of February 2014, well, let's just get straight to it. So today it's a bank holiday in the US, it's President's Day, so George Washington's birthday indeed. So it's all to celebrate that. It's a day off in the US, which means that very light on data, which is kind of good for the markets in some ways. It allows the markets just to do what it's supposed to do in its own normal, fluid way. What does that mean for the markets today? Well, typically it can lead to some quite tight ranges sometimes, or a lot of volatility on a lack of volume. So we never really know. But one thing that often happens is that any move that happens on a Monday is often retraced come the Tuesday when the Americans are back in play. So don't be too surprised if there's any move today is completely pulled back come Tuesday lunchtime UK time. As we move through to tomorrow, Tuesday, two main pieces of data really happening in the morning there. 9:30 in the morning, we've got UK CPI coming in at 2%. We're expecting there CPI Consumer Price Index, inflationary number there. It's going to be quite important for anyone trading sterling related markets and of course the FTSE. And then the German ZEW 61.3 expected there. That's at 10 o'clock UK time. Moving through to Wednesday, which is really the big data day, really. Why is that? Well, it starts off quite early, 9:30 in the morning UK time. We've got UK asset purchasing, so quantitative easing as you might call it. Also UK interest rates coming in there as well with the meetings of that meeting from a couple of weeks ago. So it's all about the minute, it's all about what they're saying rather than necessarily what they're doing at the moment. So all eyes are going to be on that. That's 9:30 Wednesday. It's going to be a big time for the markets. Again, anything sterling related, FTSE is going to have a big impact on the markets there. Can lead to a lot of slippage, so be very careful short-term traders with your positions, with your stops coming into that data. Might be a good time to close off trades coming into that. Moving through there, we move into 1:30 US building permits and PPI producer price index there at 1:30. Again, those are the major items for the US coming in there. And then finally 7 o'clock, it's the Fed meeting minutes as well. So we had the meeting a couple of weeks ago. Now it's about, again, what they're saying about it. So are they dovish, hawkish? We'll find out on Wednesday, won't we? 7 o'clock. It's kind of after most people's day trading, but certainly have your pencils sharpened for then. Moving through to Thursday, got a bit of data sort of throughout the US session really. Quite light Europe-wise, but 1:30 core CPI, consumer price index again, inflationary, unemployment claims, Philly Fed at 3 o'clock. And because it's a bank holiday in the US on Monday, today, President's Day, that shifts forward the oil inventories, which is usually on a Wednesday, shifts it through to 4 o'clock. It's normally 3:30 on a Wednesday. We've got natural gas at 3:30 Thursday. So what we've done is shifted oil inventories through to 4 o'clock on Thursday there. So for all traders, it's moving this week, so just be aware of that change to its normal action on a Wednesday there. And then finally moving through to Friday there, not huge amounts really. Retail sales, always an interesting item of data there to do with what we're buying, what we're spending here in the UK from the previous month, and then also existing home sales out in the US at 3 o'clock. So quite a bit of data out this week. The major day really, I guess, is Wednesday, UK, so the Monetary Policy Committee, rates and QE, and then of course the Fed, their meeting minutes as well. It's going to be all about QE. It's going to be what their expectations are of that going forward, and perhaps as far as the UK is concerned, any guidance on maybe when they might look to start to increase rates. Originally, they were talking about unemployment coming down to 7%, then start to think about cutting rates. We're now at 7.1% in the UK. So does that mean we're going to look to raise them sooner? Well, Carney came out a few days ago, didn't he, and said that actually they're going to start to look at other factors as well. So he's really leaving it open. I think a lot of people are expecting towards the end of 2015 rather than 2016, which was what Carney said originally a month or 3 ago. Either way, it's going to make for a bit of volatility, so we'll look out for some great markets this week, and we'll be back with you again next week for the market news video then. Thanks a lot for listening, and happy trading.